All right. People are slowly coming in, but we're going to go ahead and get started since it's 6 o'clock. Good evening, everybody, and welcome to our financial boot camp for small business. My name is Carol Crosby. I'm the president and CEO of the Whittier Chamber. Great to have you with us tonight. Thank you for joining us. Today is our third in our four-part series. And we're going to be talking about securing a loan, and we're happy to have Max with us tonight. And he's going to talk about some of the lending language and talk about some of the different loans that are offered and what might be right for you. So we are really proud to partner with the Long Beach Small Business Development Center, or the SBDC, to bring these programs to you. Our goal and the SBDC's goal is to provide great programs that will help your business thrive and get our economy jump started again. I'd like to thank our corporate sponsor, Friendly Hills Bank, and particularly the new president and CEO, Nathan Rogge, and Executive Vice President Liz Buckingham. Thank you both so very much for your generosity to our business community. Friendly Hills Bank has two local branches, one in Whittier and one in Santa Fe Springs, and they offer a personalized approach to banking. Their experienced bankers have a wealth of in-market knowledge and are committed to building relationships and meeting the unique needs of businesses, large and small, individuals and partnerships and professionals. So to introduce tonight's instructor, I'm going to throw it over to Brad Pollock. He is the director of the Long Beach SBDC and a longtime partner of the Whittier Chamber. So Brad, let's take it away.
Thank you, Carol. I appreciate it. Thanks very much. And thanks to your team. Thank you, Rick, for always being here and holding down the fort. And Quan, good to have you back. That's great. So we're very grateful at the Small Business Development Center to be partnering with the Whittier Chamber and to have the generous sponsor, Friendly Hills Bank. Much appreciated. So for those of you who might not know about the Small Business Development Center, what the Small Business Development Center does, and there are small business development centers all over the United States, is offer business advising to businesses that are getting started and to businesses that are growing. This is a no-cost service to you. You've actually already paid for it with your taxpayer dollars. We offer one-on-one business advising, crossing all kinds of disciplines: business planning, marketing, strategizing, understanding your financials, understanding how to apply for loans, and much more. And this series that we are doing with the Whittier Chamber is a really important one. It's all about understanding and demystifying the language of financials. So the first week was taught by Steve Richardson. Steve talked about the fundamentals of a small business and what the connection is between people and product and profit, and very important sort of introductory conversation. And that was then followed the following week by our advisor, Mike Huntley, who talked about understanding your financials, and he demystified language of accounting and financial statements and so on and so forth, all of which is very important for you to understand as a business owner. And tonight, our colleague and business advisor, Max Ordonez, is going to be talking about how to secure a loan. And you'll find that the language, a lot of the language that Max will be using will tie into what Steve had previously talked about and to what Mike had previously talked about. So it's all interconnected. And then next week, we're going to have the final class, which is going to offer an opportunity to ask all kinds of questions that you might not necessarily think about tonight, or that you might not have thought about a few weeks ago. So with that said, I'd like to introduce Max Ordonez, our great business advisor who handles all things related to loans and financing. And so Max, take it away, and thanks for being here.
Good afternoon, everybody. My name is Max Ordonez. I'm gonna bring up a power slide. Before I do that, I know we have someone on iPhone. I love to rename you, so that way, if you ask a question, we could identify you, if you don't mind, who's on the iPhone. Okay, that's fine.
That's okay. If
we'll do that later. We'll do that later. We'll get to it.
All right.
So So let me pull this up real quick. And I imagine you're all of you, or should be, or maybe you're listening to, we're going to talk a little bit today about the third part of the financial boot camp for small businesses. Today's session is securing a loan. As you recall, Mr. Richardson covered the 3 Ps: product, profit, and people. We're going to revisit that a bit today and how it fits into securing a loan. The second session of the financial boot camp was Mr. Huntley covered financial statements, in particular the profit and loss statement, the balance sheet statement, and the cash flow statement. We're going to revisit those again when we're securing a loan and in preparation of securing a loan. So we're going to get started, and let me go right into what we're going to talk about today. A quick introduction about, we had that already. Quickly talk about common ways we or small businesses fund a business. The core would be what we're going to talk about today is preparing my loan package. So this is preparing your loan package. So we could call it preparing my loan package. Assistance we could provide through the Small Business Development Center and possibly other resources that you may have questions about. And lastly, we'll have a question and answer period where everybody could ask questions, and feel free to ask detailed questions. If you want to put them in the chat, feel free to do so. If I catch it in the chat and then I could do it during the presentation, it's fine. That should work as well. But the majority of the session is probably going to be about preparing my loan package. So and we're talking about whether you're a startup business or an existing business. So everything's going to apply to both now. We're finding that working with all our clients, there's a lot of core things that the lenders, in particular banks, and then also there are other types of lenders, what they're asking for, what they're looking for in the loan package. And our goal is to help you prepare the best loan package so you have the best opportunity to secure a loan. So let's get started. Any questions at this point? None?
We're looking good.
All right, fantastic. Real quickly on common ways to fund a business. And the Kaufman Foundation, which is a foundation that does a lot of activity in entrepreneurship, also one of the partners that's partnered with Long Beach City College and SBDC in the past. How do we fund our business? From our savings and our personal cash flow, or from the business cash flow? In some cases, from credit cards, sometimes personal credit, majority, usually personal credit cards to start that business. Friends and family. In some cases, those alternative lenders, which we kind of are not going to talk about today. Investors, that's a whole different topic on how to get funded by investors. We could have another session on specifically on that. Today, we're really going to talk about lenders. And when we talk about lenders, we're not only talking about banks. Keep that in mind as well. There are also credit unions, a lot of our local lenders, regional and local lenders like Friendly Hills Bank, and community CDFIs. I'm going to try to stay away from acronyms, but just one that you should be aware of is CDFI, Community Development Financial Institution. They're nonprofit lenders. Usually that's who we work with our startup companies. And you could ask a lot of questions about that later on when we go into the question period. So let's talk about preparing your loan package. So if you're going to prepare, whether it's a startup or an existing company, you're going to have to gather some information. In this case, the business information. What's going to be needed? And we're going to kind of cover about 7 points that you're going to need to secure that loan. And we're going to talk about each one individually. I just wanted to cover them real quickly, what we will be discussing in the next period. is you're going to have to develop a business plan. Sometimes some people call it a growth plan. If you're an existing business, you're probably going to call it a growth plan because you're already in business. You're just ready to grow, whether you're going to expand, whether you're going to add additional services or products. Remember the product line that Steve Richardson covered in that triangle, and develop a 24-month forecast. This is something we are seeing from all our lenders, even all the lenders, even for existing companies, is the development or a clear forecast of 24 months into the future for your business. That would be also on a month-to-month basis. So let's say we're looking at, we're in June now. They would like to see how your financial statements, going back to Mr. Huntley's conversation, how your profit and loss statement and balance sheet are going to look in the next 24 months on a monthly basis. Third, we're going to talk about funds that you're going to request. Be specific on what type of funds you're going to request. We'll talk a little bit about that. Be clear on the use of funds, how you're going to use those funds, possibly the timeline when you will be deploying those funds and for what purpose, which we go back to what the specific purposes of those funds requested. We're going to also talk about 3 more things, which include, what is your capital infusion? What does that mean? How much capital are you putting in? And we'll go a little bit into that, how we could communicate that through our loan package. How do we refine and practice our financial pitch? We'll call it a financial pitch or loan pitch. How are we going to discuss our business plan with the potential lender? It's going to be, some people call it an interview, some people call it a meeting, some people could call it a pitch, but we'll call it financial pitch just for our purposes, because you're going to have to effectively communicate to the lender in summary what your business does and how you're going to be looking in the future. And lastly, one of the things that we're seeing now is also we've had 2 years of living under COVID or aspects of COVID. There are certain COVID questionnaires, COVID questions that are being asked by lenders. And I'll give you one or two examples, and we could even have a discussion on how to address that for each of everybody in their business. I know we have about 4, 5, 6, 7, 8, 9, 10 businesses. If you need, we could ask questions about any of this as we go through it. So we have a lot of ground to cover here. So I'm going to try to be timely. Preparing, again, your loan package. We're going to talk about the business plan. How do we develop that business plan? There are so many templates out there. We have an SBA provides a wonderful template, but I think the template really should be pretty simple. It should answer a few questions. And I think Mr. Richardson covered it very clearly in the first session, is be very clear and communicate in that plan what your product is or what your service is, right? Not all of us are product businesses. A lot of us are service businesses. We need to be very clear of what we're going to be doing or selling, and you're going to have to communicate that effectively. And that's something we could assist with as well. What is your business model? I call it a business model, but we should really be using some of the nomenclature that Mr. Richardson covered in the first class. Was, how do you create a profit? How is your business going to be profitable? How are you going to be profitable selling that product? How are you going to be profitable selling, providing that service, providing that service? And then you're going to dive into the second part that we talked to. What are some of the gross margins for that product or products, because you have more than one? And what are some of those net margins for that particular service you're providing? That's where we had a clear discussion on that with financial statements. And in that case, the profit and loss statement is going to be the one who's going to tell us and communicate to the reader, yourself as a manager of your business, and to the lender what those margins look like. Don't be surprised that the lenders may look at your particular industry and have data data in California, and maybe specific Southern California, what those margins may be based on their all of their data they have. And they use a lot of it's called it's a resource that bankers use to look at what kind of gross margins and margins businesses are providing in certain marketplaces. So those are very important. You have to be able to explain to them what those are. So we're going to talk, what is your product? How are you profitable? Remember the 2 Ps. And then what marketplace is your business in? What particular, is it in the Southern California market? Is it in the millennial market? What marketplace are you providing that product or service? And the more specific, the better. Again, we didn't discuss marketing yet, but that's clearly something that I know was covered under product and market. And who are your customers? Do you know who your customer is? Do you have a customer profile of who your customer looks like? Is it Jane, who's over 30, lives in the suburbs, making over $100,000? Who's your customer? Do you know who your customer is? Who's going to buy your product? Who you're providing your service to? Is it a Fortune 500 company? Be able to communicate that as best you can, and it's going to really help you in your marketing dollars and your efforts. How are you going to reach your customer? Where does some people say, where does your customer hang out? Where does your customer, where are they at? How are you going to communicate? How are you going to get to them? And the last P, in this case, people, any information that you could give doesn't have to be a full resume. It could be a 3rd page, half a page, or a full page of the key staff members on your team and key owners. So so developing this business plan is exactly what Mr. Richardson said in session 1: product, profit, people. And under product, we would put in there who you're going to market that product to, who are your customers, and how are you going to communicate and reach your customers. I put this in questions because those are questions we should ask ourselves as whether we're going to continue working in our existing business, in our existing market, or is this going to help us identify a new marketplace, potentially new customers, or is it existing customers or a new product or service? That's very key as well. And that's something that we at the SBDC work on. Preparing my 24-month forecast. I'm not going to dive very deep into this. I think Mr. Huntley did a great job on this when we talked about financial statements. But we do need to forecast our revenues over the next 24 months, month to month. So if we were doing it now, you have actual numbers probably through May or April, and you would forecast through the end of the year 2022. And then forecast for next year, 2023, for the complete 12 months. That is a very powerful tool that you should have, whether you're looking for a loan or potentially looking for a loan. You should be doing this anyway. Revenues. What is the direct cost of that good that you're selling, in this case, product? Or what is the direct cost of that service you're providing? How are you creating that $1 of revenue? What's the percentage, or what's the amount of effort that's going to go into that product or that service? And knowing your margins. And again, going back to the financial statements, and this is where the profit and loss statements is very important, but we have to be able to forecast this into the future. And how are my general administrative expenditures going to look? How's my rent going to look for the next 24 months? My insurance policies, and some of the other general administrative, also people call it G&A, general administrative expenses. And from there, from all that activity, you're able to provide net income and potentially cash flow. And that is important for any lender to know, where are you going? What is the roadmap of your particular financial forecast? As you're thinking about drawing out a business plan or a growth plan in some cases, the forecast, you're going to have to also identify why are we looking for a loan? I'll tell you what the wrong answer is. How much can I borrow? That is not a very good answer. No lender wants to hear that. Lenders want to hear specific and possibly dollar amounts that you could quantify. Be specific on the quotes. Have some equipment quotes. If you're buying, I had a client who is in the electric vehicle repair market, and they had to buy some new equipment, and we knew the total amount based on 3 manufacturers that it was $90,000. And we selected the quote, and we provided that in the business plan, that we had 3 quotes, and the best one at this time for the business was a $90,000 quote. We provided that in the funding request. Be specific. If you need new trucks, new equipment, whatever that may be. Marketing, maybe you have some proposals, possibly going to do some improvements in your office, in your factory, whatever those proposals are. You should have a construction proposal from a 1 or 2 general contractors. What the total construction cost would be, and what are the details behind that. Any estimating permitting, any permitting needed for your location, if any, if applicable. Some other proposals that you could receive also, if you're going to request funding for marketing, or even some marketing social media to enhance your marketing for your business, you should have a proposal. You should have a few proposals, more than 1 proposal. It'll provide you a benchmark of what that dollar amount may be. All these dollar amounts are going to be what's going to help you prepare your forecast. In some cases, a lot of these type of expenditures are one-time expenditures, and we'll talk a little bit more about that in a little bit here. Yeah, the use of funds. One-time investments, we talked about that equipment. We talked about those leasehold improvements. Some other use of funds could be some of the startup costs, so maybe a trademark or some other type of startup costs. And we could talk, you could ask me more about that in the question and answer period. And if possible, when are these dollars going to be deployed? Are you going to use those funds in month 1? Or are you going to be using that money to cover that marketing proposal over the next 12 months? That's the kind of questions that your forecast should answer, and you should be ready to answer in the lender interview or in the lender pitch that we talked about. One of the things that I've seen people forget is they forget to include how much of investment they've put in, and making sure that all your assets, remember your assets on the balance sheet that Mr. Huntley covered, all the assets that you purchased, the tools that you provided, the vehicles you contributed, and the capital that you've invested in your business. All these are very important, and you should know what they are. And the lender may even ask, particularly when it's a startup, especially in the startup position. But all that should be reflected in your balance sheet. And many times, smaller businesses don't include a lot of these assets in their balance sheet. And I think that you're doing a disservice to yourself, because you're not reflecting your true investment and effort that you put into your business. So it's a good time to review the balance sheet and look at some of the assets that continue to provide for your business over a year. That's what an asset is. So any contributions, vehicles or equipments, let's look at the cost, put it in the balance sheet, communicate that to the lender, what you have. And again, we're just talking right now about the business aspect of it. So what's the total capital you provided? Know that number. Getting to the end of this is we talked about a financial pitch. The lender's going to want to talk to you and ask you questions. They're going to read your business plan. They're going to read your look over your 24-month forecast. They may have some questions. They may have something. Maybe they don't understand your industry as well as you do. Remember, you're the expert. You're the expert in your industry, and you're the expert in your business. So any questions, you have to be ready to answer those questions. If you have a business partner, or any other shareholders that are key shareholders, they need to be in that meeting because they need to be able to answer these questions. Again, knowing your profits, how are you marking up your products? How are you providing your services? What kind of margins are your products or services producing? And also, many times they'll ask a little bit more about your marketing strategy and be specific about who your customer is. And they want to know what that is because they want to understand your business better. They want to be able to communicate that to the underwriting team or to their loan committee why you're a strong candidate for a potential loan. And getting to the final part is the last 2 years COVID. One of the questions that's coming up is that you should be prepared, or even they'll send a survey or even a list of questions for you that may say something. Is they'll ask, is your business classified as an essential business? If you're in business now, a lot of you know other businesses that were essential, and some were not labeled essential for whatever reason. You need to know what that means. You need to also know if COVID or a related situation occurs, is your business prepared? I'm going to repeat that again. If COVID or a related situation occurs again, how is your business prepared to deal with that? And I think that should be that's going to be asked. Sometimes we'll even put this in the business plan to make sure that we know that in many cases your businesses are essential. We're essential during COVID, that they are. That put that in there. And when they ask these questions, we'll be ready to answer them. Here's the U part. Let's talk about the U part of my loan package. We talked a lot about the business. We talked about the product, the profit, the people, the financial statements. But here's the U part in this. One of the key documents they're going to ask for in any type of lending, whether it's a small loan of $5,000 or a huge loan of $10 million, they're going to want what's called a personal financial statement. What does that mean? All it is your personal balance sheet. It's this is my balance sheet. This is not the business balance sheet, but your balance sheet. And basically it lists the assets you may have, cash, savings, vehicles, your home. Maybe you have a rental property, minus liabilities, any liabilities you may have, a credit card, outstanding loan, car loan, maybe a mortgage loan, and maybe a mortgage loan on that rental property. And from that, we get net worth. Assets minus liabilities equals your net worth. In this case, this is your personal net worth. And this is a very standard document, and most lenders use the SBA form. And we could go over that a little later if you want, and I could show you an example of how to fill that out. That's something you should be aware about, be very aware about when completing a loan package. More parts of the U part. Understanding what outside income you may have, rental property of any sort. Some of you may be veterans, collecting a veteran's pension, or maybe you are collecting a pension already from a government agency or a private company. All that, or a disabled veteran may be receiving a disability monthly check of some sort. That is outside income. Other income, include that. But maybe you have a duplex, you're renting out one of the units. That is all other income. You should include that as well. Again, we could go over the specifics of that. Have your tax returns done. 2 to 3 years. At least 2 to 3 years of business tax returns if you've been in business. If you haven't been in business, if you're starting your business, obviously you won't have tax returns, but you do have personal tax returns. They'll want personal tax returns anywhere from 2 to 3 years, depending on the size of the loan. Sometimes they'll even ask just for 1 year. In this case, you should, by now, we're already in June, you should have these tax returns ready. Lastly, credit. Knowing what your personal credit situation may be. A lot of the lenders recommend freecreditreport.com. It is free, I believe it. You could check and pull your credit once a year for free, and you could do that for freecreditreport.com. I'm not promoting them. It's just, I see this from a lot of the lenders. They use that particular report, and they may even ask for a copy of that in some cases. So that's something I should include in that list of documents to be submitted. Lastly, collateral. Remember, we talked about your personal assets minus liabilities and net worth. Those assets, they may ask, do you have any collateral? Do you have a home? Do you have a rental home? It may be necessary for a loan, depending on the size of the loan, depending on the type of loan, and depending on the type of lender. So there's a lot of variables on that one. So C for credit, and also C for collateral. And what kind of assistance do we work with at the Small Business Development Center? I know we have a lot of my colleagues on, Brad, our executive director. This is the kind of assistance we provide at no cost. Business and growth plan assistance, the business forecasting assistance, loan packaging, reviewing that loan package, and assistance in putting that loan package together, putting the best loan package together so you can communicate to a potential lender why you should get that loan. And we identify the right lenders. There are lenders that do small microloans of $1,000, and there's plenty of lenders who do loans of up to $10 million. And it's identifying those right lenders who fit your industry, who fit your personality, maybe in some cases, or fit the industry that you're working with. That's usually the case, is the industry, or who's interested in working with startup companies or fast growing companies. There are some lenders who differentiate between that as well. Question and answer.
Max, I'd like to ask a question to Steve. Is there a sweet spot for most lenders on a range of what they like to lend?
Well, I did mention the range of loans that we work with, anything from 1,000. I've seen loans that we worked on up to 10 million. There are different lenders. I think I mentioned CDFIs, Community Development Financial Institutions, that are nonprofit organizations. They would do more of the microloans, the $1,000 to about $250,000 in the current marketplace right now. And also other SBA products. Most banks, I can't think of how small a bank would do a loan, but I would say line of credit's 25,000 or more. And there's every type of bank has different type of loan products as well. So that's part of what we work on is working with the right type of loan, because there are different type of loans that I didn't get a chance to talk about. There's line of credits, there's term loans. Line of credits are used to fund your potential accounts receivable and purchase orders. And term loans are more of a fixed loan that's paid over 5, 7, or 10 years that has both a principal and interest. The type of loan, these types, there's other products that are used by lenders. So that's also a very important part of the process before you meet a lender, is knowing what kind of loan do you really need.
One more question for me is the loan process, the loans package process very similar between a traditional loan and a line of credit?
I would say it is. Now, in this marketplace, in the current lending space, I am seeing it. Yes, they're asking for everything, and they're asking for everything that we noted on there. Even for existing businesses, they're requesting forecasts.
Max, you mentioned that in the COVID questionnaire, whether or not the business is essential. What if your business is not essential?
I think you have to address the fact that if something were to occur like COVID, how you're going to engage your business to continue to conduct business and in what fashion, whether it's remote or non-remote, whether it's pivoting to a different product base, you have to know that now. So yes, the question is a little more difficult for a non-essential business, but that's something that we should be aware of now. Similar to, for years, we've had a recovery plans for our data, for our business information, same thing. We're aware of it, it's here, and we need to know what we're gonna do if it happens again to that point.
And I have a follow-up question. In your experience with businesses that are applying, they're putting together a loan package with you, what typically do you find are the most common hurdles that businesses face when they're pulling together their loan packages? Is there a commonality? Is there a common denominator you find in your experience that the businesses face as a sort of the biggest hurdle to?
I think communicating, well, I would say credit is a big one, because a lot of companies that start, okay, it depends what stage they're in. I would say early stage companies usually have a lot of credit card use, and that impacts their credit. And how do we get out of that credit card use to business credit or a business line of credit? I think that's a very unique challenge. I would say that that's one of the biggest challenges for early stage company. Existing businesses, I would say cash flow, identifying that cash flow, reporting very clearly what their actual income is, not including personal expenses in their accounting.
All right, so the cash flow statement, obviously very important.
And the tax return even more. Mm-hmm.
And you had your sort of the implication is that that lenders are being very, very careful right now. Is that the climate right now?
Going back to your question, the third one is most clients have not been able to provide and communicate their balance sheet on their tax returns and on their financial statements. And they look much smaller than they really are.
They look much smaller in what sense?
In the sense of assets, and the total assets that the company has acquired or invested in. And then the net worth of the company is really clearly, there's net worth in many cases. And if they're not putting everything correctly on their balance sheet, that's something that was the third one. I would say that's something that I've seen even with large existing businesses, their balance sheets are still not correct.
Very interesting. Very cool. Thank you. And also just coming back to the climate. So what is the climate right now?
I would say it's much tougher than it was pre-COVID. You have to be prepared, have everything prepared, and be able to answer anything that you provide to the lender.
Right. Got it.
And then they are and their compliance, they're asking for financial statements. It could be in your loan. It could say we want financial statements on an annual basis. That's usually the case. But in some cases, they may even ask biannually or even quarterly, depending what industry you're in.
Right.
So keeping track of your accounting, keeping up all your records updated are crucial. Also, from a management standpoint, that's something you should be doing anyway. Just shows good management discipline.
Yeah. Are there some particular sectors right now, Max, that are more attractive to lenders?
I would say I wouldn't say there's any more attractive. I think there's certain sectors that have been mostly, I mean, we talk about hospitality, event companies may be the hardest hit from the last 2 years, that it's difficult for them to show profits in the last 2 years because the struggles in the last 2 years, but they're able to reflect a strong 2022-23 from the activity on their financial statements and on their forecasts. Certain sectors are still struggling. I'm not struggling, it's just very difficult. The story and the history of the last year has been very difficult.
I think we have a hand raised. Quan, would you like to chime in?
I think because we have a varied audience of different background, I know for us, when we started, we had an opportunity to acquire the building that we're currently leasing, but was not prepared to put together a financial statement or a package that was palatable to the lender. So if you can, because the question I was typing up and I thought a verbal question would be better is, what can small businesses take steps over the next 6 to 12 months to evaluate their current situation and then prepare a balance sheet that is strengthened and then a profit and loss statement that is shows a better gross margin or net margin with some free cash flow availability that makes the loan application much more palatable than just, hey, I need a loan for $5,000 equipment. What is the output? I mean, these are steps that we can take. And for us, unfortunately, back in 2012, we were just coming out of the 2008 crisis and money was hard. The interest rates were high and not many had an appetite to lend me $1.7 million for a $3 million building, even though we were getting it at 70 cents on the dollar, just I couldn't get the loan. Now we look back and the property's now worth 3 times that, so it's the opportunities that's lost and the opportunity cost that comes and associates with when a business has failed to get or secure a property loan. So I'll just keep it at that, try to keep it simple. That was a long-winded question.
I think again, the exercise about putting a 24-month forecast, I know the session is about securing a loan. I think that's just something that every business should be working on right now. Keep in mind, a forecast is not a picture in time. It's a moving, it's a living document that moves along as more data we have more data, right? We just got to the end of May, was what, last week? We know what our May numbers are. We should know right now what our May revenues were, the respective direct costs related to that revenue for May, and what our general administrative costs were through May. And we're just on June 6th. A good management team of any organization of any size, nonprofit or for-profit, they're going to know those numbers. Whether they're good or bad, the result may not be what you want it to be, but you need to know where you're at. And I think that discipline, I think, is because we're not business owners, we're not accountants. We put that last sometimes because we're great operators. We're great with people. We know how to manage people. We're a people business. We know how to design. We know how to build. We know, but we have to go back to that discipline, that financial statement management discipline. I think that's key. I think for any business, small or large. And I've seen some very large businesses in the past that did not have complete balance sheet. I'm talking $20 million businesses. They did not have complete balance sheet. but very successful. But once they knew the and the only reason they worked on the balance sheet and everybody stopped and actually worked on it was because they wanted to value the business because they wanted to sell it. So we needed to know what the assets were valued at. And there was a lot of assets missing. So those are the kinds of things I think. One, two, I would say, don't put personal expenses in your business. Just kind of put that out, take that out of there. You know, just keep that separate as much as possible.
Thank you.
I think Mike has a question.
Yeah, I've got a couple of questions for you. One is, roughly, what's the time frame when you meet with the bank? I know the answer is it depends, but you meet with the bank and do your pitch and present your application. How long does it take? I know there's probably a number of back and forths that may need additional data, but before they make a decision, and then after they make a decision, then how long does it take for the funds to be available, roughly?
Oh, great question. As far as the loan package we discussed, when the complete loan package is submitted, most lenders are very good about looking at that in the next 2 to 5 days. From that state, then usually they want to interview the business owner to learn more about their business, the marketplace they're in, their customers, and how they're going to look at their business financially in the future. From there, they may have additional questions. So they may have additional questions. They have to go to an underwriting process in most cases, or a loan committee process. So loan committees could be once a month. So you could be, let's say the loan committee is on the 30th of June, and on June 1st, the lender you're communicating with is saying, I'm going to submit this for approval. I need to wait for my loan committee to approve it. So it could be anything 15 to 45 days, I guess.
Gotcha. And the other question I had is, if I had an existing business that did get a PPP or an EIDL loan, how does the bank factor that in when they look at, I need new funds for growth or a line of, capital, working line of credit for capital? How do they factor in a PPP and an EIDL loan?
That's a great question. Obviously, if you have a PPP loan, make sure that you apply for forgiveness. If you need assistance with that, we could help you with that. That's something we've been working with many of our clients, is to apply for that forgiveness. If it's not forgiven, then it is a loan. Make sure you communicate with your bank that you want the 5-year payment period, not the 12-month period. But if you want to pay it off earlier, great. If you want that, but at least get that. So the payment is paid over 60 months as opposed to 12 months. So doing that, and the payment itself is lower, right? And we know the EIDL payment is quite low because of the 3.75 over 30 years. They'll just include, we have to include that in our cash flow statement, that beyond our expenses, we're going to have our interest expense in there from the PPP. We're going to have our interest expense from EIDL, but also we're going to have a cash flow need to pay that principal off on both loans. So that's part of the balance, doing that forecast, profit loss forecast, but also a forecasted balance sheet will reflect that payment.
Okay, thanks.
They're not a negatives by any means. They're not just because you have a loan, existing loan does not mean you cannot obtain another loan.
Okay.
It doesn't mean that. No.
Okay.
Plus, both loans have very low monthly payments that are more advantageous for the potential applicant.
Okay, thanks.
Anybody else have any questions for Max today?
I don't know if Tanya or Jorge or Jesse or Janita or Audrey or Alejandra wanted to ask any questions. Anything come to mind?
I'm just taking it all in. It's very informative, and especially in the planning process. So yes, very great information.
Thank you, Janita. Anybody else? Well, I guess we'll wrap it up then for tonight. Everybody good with that? Thank you so much for joining us. Many thanks again to our very generous sponsor, Friendly Hills Bank. There's your slide. They offer financing solutions, including lines of credit, equipment financing, commercial real estate financing, construction financing, letters of credit, business credit cards, as well as a variety of other deposit options. You can look at friendlyhillsbank.com for some more information. They're great over there. And as a reminder, this is our third, next to the last session. We will meet again next week, next Monday at 6 p.m. And really, this is your chance to bring all of your questions to this forum. We have some great experts. All of them will be online. Brad's going to moderate the session. So we got Mike and Steve and Max will be back. So if you have any questions whatsoever on finances or how to do, how to read your financial statements, or, something comes up and you want to talk about securing a loan, you happen to think of a question at 2 a.m., which often occurs to me, often happens to me. We'll be talking about that next week. And again, we'll be talking about how you can secure your one-on-one mentoring session. And correct me if I'm wrong, Brad, but this can be on any topic that your business might have special needs in. Is that correct? Or we're just limiting it to the financial part of it?
We don't answer questions about salsa dancing. That's the one
Okay,
thing
no salsa dancing
that we can't focus on. I'm sorry, it's part of the grant,
Okay.
But everything else.
No salsa dancing, but you can ask questions about social media and marketing, right?
Business planning,
Finances.
import, export, marketing, strategizing. This is business advising in its best form. Carol, thank you very much again for the opportunity. And Max, thank you. That was super informative.
Awesome job, Max.
That was great.
Thank you, everybody.
Really, really good. And Rick and Quan, thanks so much. And thanks to everybody for participating. So we'll see you all next week.
Enjoy. Have a good week, everybody. Be
You
safe.
too. Bye-bye.
Thank you, Brad.
Thank you, Carol.